Okay, so today is a bit different. Going to do a trade breakdown of yesterday's trade. Unfortunately, because your funded accounts, or basically trading a funded account, deletes your execution marks after the day passed. So that's why I show you the recording right now. So right here you can see my executions. But before we go into that, I want to make a trade breakdown of today's condition as well. What I was thinking, lots of trades taken yesterday. Definitely a lot to learn, but I'm also really content with the high quality market maker buy model we had yesterday within our 10 AM macro. Still, really a lot to learn from that yesterday. But also really content how I used regular trading hours. So let's just go over it. So yesterday's trade, so we had Friday's conditions. So what was important to me, basically I marked out the daily wick right here of the down close candle, kind of like a could be treated as a rejection block. As you see right now, we are trading a lot higher, so but we are not referring to that. We have also still marked out the bearish fell gap right there, how we reacted to the upper quadrant level or lower quadrant level in that case. And so definitely bullish news coming into the market right now. But we see if we are done trading lower, or if we're going to see only a short-term run stops basically above the high right there, and if we can continue lower, we have to see basically next week. So let's drop to a hourly chart. Right here you can see the different sessions. So I think nothing really special here. What my opinion is, if we are trading in something like a price range we have right here, so from high to low, you can see this really aggressive move to the downside, then it's definitely a bit more difficult to trade, because we have no extra liquidity. We basically can sweep. We are still trading inside a range. We have no aggressive continuation where we trade basically align the lower time frame with the higher time frame. So it's not that we have the best conditions to trade in if we are basically still trading within a price range. In that case, because we can see we kind of formed this market maker buy model down here, it is not reasonable always to look for shorts, in my opinion, because right here you can definitely see that we respect bullish, we respect the hourly fell gap right there. We definitely do have also really high resistance in here. We have consolidation here, but to me the draw is in that case, if we're this close to external liquidity, that we are going to reach the buy side liquidity, and that we are not going to reverse on the higher time frame until we reached the external buy side liquidity. That's really important to keep in mind. So we should not really expect that we will continue to trade lower from there already, unless a S&T is in play. So that's what I wanted to say. So let's take a look on the sessions a bit more carefully. So I will delete the last one. So just Asia London as always. So scrapped Asia, lowest trade lower, also formed the low within London right here. Also clean market maker buy model here being in play. Came up, scrapped Asia highs. Then Europe and kill zone basically trade lower. Also created liquidity right there, also in advance of the high of the day right there. We came down and then we opened up, traded lower, swept London lows, and from there just traded higher. Afterwards targeted also New York kill zone by the liquidity, and from there really ranged around basically also within the daily wick quadrants. So that's why we also do have a kind of high resistance in here, because we're definitely reacting to the CE level of the daily wick. As you can see right here, the bodies are respecting it perfectly. And we are just consolidating basically around the quadrants. So right here staying also below the upper quadrant level basically, and still basically within the range. I think we can also take a look on the 5-minute chart. But before we drop now to the executions, I want to show you regular trading hours. Also marked it out kind of how I took the trade right there. So what I was looking at, as you can see right here, we have no Newton range gap. So 18 handles, that's nothing. We can't look at that basically. In that case, what we want to see is we want to look back, do we have any previous New Open Range gap? And yes, we do. We have this one right here. And why is this one so important to me? Because it's basically a trending New Open Range gap, so a really trending New Open Range gap, 300 handles. And as you can see right here, we traded higher. We had this regular trading hours, market maker buy model. We came up, swept the buy liquidity, and from there on dumped lower. Completely traded through it. As you can see right here, this is really important to me because we have this huge down close candle, this huge inefficiency right here, right at CE. Therefore, we have only a sell side delivery. In that case, to me, that's inefficient. I would like to see that we came up trade at least back to the upper quarter level and fill in the inefficiency right there. So that the price range is basically right there becomes a balanced price range. So we have sell side delivery, and then we need to see buy side delivery. And that's kind of clean to see how we traded today, because as you can see right there, we stopped approximately at the lower quarter level, especially right there with New Open Kill Zone. Oh no, that's not New Open Kill Zone. With the end of the day, I mean, that's before 9:30. That's important to keep in mind. I forgot it. But yeah, so therefore we traded lower. Okay, 9:30 opened up, we traded lower. In that case, we did not take out the low right there because it already was a short-term run and stops right here. So that's not equal lows. That's protected liquidity right there. I actually like to see that we failed to take out the low. And then yeah, we trade higher and we can aim for CE. So that's what we basically look for, that we trade back to CE. Why? Because as I now mentioned before, with that we fill in the sell side imbalance, buy side inefficiency. I think that's the right term. But yeah, it's just a inefficiency we want to see that we deliver to the upside. And in that case, yeah, really, and you really took its time today right there. Why? Because we had also medium impact news at 10 a.m. Actually, I did not expect that it would have such a great impact on the market today, because as you can see right here with 10 a.m. we see a actually quite aggressive candle. So 90 handles in 1 minute. That's now the reality. But yeah, so really volatile trading lately. But yeah, therefore, because we had also medium impact news, which had actually a greater impact than expected, we have also time distortion here. So really, yeah, consolidation until we are now able to displace higher, and then from there on really aggressively expand even above, yeah, how you call it, external buy side liquidity. So AM external buy side liquidity. Because we still want to see that we reach for CE. So that's basically our what we keep in mind. Okay, that's really important. So now we'll switch back to electronic trading hours and the what I marked out. So I showed you before, I expected we spool above AM session liquidity. So that's what we saw right there. And therefore, I like to see, because I want to see that we trade back to CE, that we trade into the opening prices right there, because that's above external buy side liquidity. That's a great target to look for. And also, as you can see right there, the CE level of our previous daily or weekly opening gap, I just labeled them basically as higher time frame gap. We also do have really external buy side liquidity, in that case the New Open Kill Zone buy side liquidity, but sometimes that's really much to expect because our market maker buy model is actually already how you call it, confirmed or finished after we reach external buy side liquidity, and that's right there. And then we can also, if we want you to look for higher prices, just basically measure the price range right there, so from low to high, and look where do we have any quadrants. And we see we have the minus point or the 0.25 extension level right there, so that's also a reasonable target to look for. As I now mentioned before, also the C level of the high time frame gap, and eventually even the 0.5 extension of our price range, which is also at C of our daily wick. And yeah, that's also where we traded later too, and also reached New Open Kill Zone buy side liquidity. But as you can see, we really had this high resistance retracement lower, so therefore it's really reasonable to take targets, to take partials. So now I think I've yeah, mentioned more than enough what I wanted to see. So now let's basically talk about the executions. Yeah, so I wanted to see that with 9:30 we open up, trade lower. And then we already had this kind of V-shaped looking pattern right there. So we already took out New Open Kill Zone liquidity. We took also out the low right there again. which is kind of clean to me. So I like to see, now I mentioned, or as I mentioned before, that if I want to see higher prices, that 930 manipulates lower. And that's what we got right there. And actually I was kind of really cautious in here, I have to admit. I was really patient and waited, and I was thinking that this is probably not going to deliver higher, but it was actually looking quite clean. But yeah, we failed at the fair gap right there, trade lower, but I entered long already right there, I got stopped. So that was my first trade. And yeah, once again, too rushed. Even if the price action looks good, it's just not at the right time. We're just way too early. I think 940, no, 935, something like that. It's way too early. We have to wait at least for something like 945. So 10 a.m. macro. That's really important. So we re-sweep the low right there, trade back into the high time frame gap. I was now kind of also looking at London lows, enter right there as well, because we created a SMT with ES. Actually, I like that we would not sweep the London lows. Would have been quite clean to see that we really stopped right in advance of it with the SMT. But here, once again, yeah, the price action is just not clear enough. So we have no really clear structure in here. I'm just way too impatient. I mean, I see, or I basically have the vision. I know what I want to see. I know that I will, or that I want to see this V-shaped movement to the upside right there. But in that case, I'm just way too early. I still have to wait for an entry pattern. In that case, a PD array. I need to see displacement. So yeah, also way too early once again before 945. Yeah, also got stopped right there. We now scrap London lows, trade higher. Yeah, entered, got stopped. And then I thought, okay, now we saw this aggressive CST above the down close candle right there. This has to work out. Yeah, went long, got stopped. Also then went short because I was kind of, in that case, really confused, I have to admit, after taking 1, 2, 3, no, 1, 2, 3, 4 losses. I was really convinced, why do we not trade higher? So there's something wrong. Went short, but in that case, the short was just against my hard time, against my bias, so was just out of emotion, I think. Yeah, went or got stopped right there, and then finally my last trade, after taking 5 losses, entered right there. And I was now really convinced, okay, we have SMT at the lows as well. We need to trade higher. This is really manipulation, time distortion. We need to trade higher with 10 a.m. Entered right there. Yeah, we finally saw displacement, and that is what I need to see. So we could have once again completely avoided all trades if we are just more patient and if we do not act out of FOMO. We have to wait for the 10 a.m. macro. We have to wait for our entry pattern. We need to see displacement. We need to see kind of a more clear structure. In that case, we have really high resistance below the CE level of our high time frame gap right there. There's no way that we kind of enter within the consolidation right there. We need to see displacement. We need to see clear signs that we're going to trade higher. And that's what we got with the displacement right there. So we could have completely waited for that and avoided so many losses. But still, yeah, with right risk management, you can still be profitable on green on the day after taking five losses. That's quite insane, but yeah. So entered right there with 2 contracts, and then with 10 a.m. I did not expect it such a aggressive move to the upside, but it's really clean to see. So 10 a.m. delivered higher, so we've kind of also time distortion before that. That's why also time had a greater impact, I guess. And yeah, then we trade higher, use the inversion for gap right there, trade higher, trade above external buys liquidity. Did not take any partials in here because I was really convinced that if we're going to trade higher, if we have this V-shaped market maker buy model, we would also trade above external buys liquidity, as I mentioned before. Took my first partial right there at the, I think, opening prices, and then closed right there. So not perfectly at CE, a bit lower, I think around at the 0.25 extension level, something like that. But yeah, with that, actually, I'm up on the day after taking 5 losses. But yeah, completely avoidable taking so many trades. I just ran down equity way too fast in here. I have to be more patient. I cannot take so many losses in such a short period of time. So that's really important, but still I like how I'm really marked out and basically analyzed today's market maker buy model, that we would see a expansion above external buy liquidity back to a previous Nopen range gap CE level without having a Nopen range gap of for today. And yeah, so really clean market maker buy model still. And yeah, I think that's it for the trade breakdown. So hope you enjoyed it. Yeah, hope you learned something new, and I guess see you next week.